Welcome, everybody. Good morning. It's my pleasure to introduce our fifth presenter for today. ReGen 3 is a clean tech company commercializing its patented technology to recycle used motor oil into high-value Group 3 base oil. With a focus on creating sustainable solutions that generate better environmental outcomes and compelling economics, the ReGen 3 process is expected to reduce CO2e emissions by 82% as compared to virgin crude-derived base oils combusted at end of life. Operating in an underserved segment of the base oil market, ReGen 3 aims to become the world's largest producer of sustainable Group 3 base oil. Here today to discuss other of the fascinating advancements is Mark Redcliffe, President of ReGen 3, along with Kimberly Hedlund, Vice President of Corporate Finance. Thank you for being here today. Kim, Mark, over to you both.
Thanks very much for having us, Carolyn, and appreciate the opportunity to present today. Hopefully the stage lighting is great. With that, yes, I'm Mark Redcliffe. I'm the president of ReGen 3. I'm a CPA CMA, and I'm based in Vancouver. I joined ReGen 3 just over 5 years ago after our CEO, Greg Clark, had secured the intellectual property as well as recapitalized the firm. And I was initially attracted to the business because of both its environmental and financial impacts. Prior to joining, I spent 21 years in the capital markets in various roles, including several as a venture capital investment banker. It's important to understand that our team has evolved dramatically over the past 5 years, and if I can make it akin to a mining project, we've discovered the deposit we're now replacing and sifting through all of the exploration geologists, if you will, and now putting in place more of the technical people to actually build out the facility. Our team has a broad scope of depth in not only finance, but oil and gas operations, as well as project execution. Presenting alongside me today is Kimberly Hedlund. Kim is also a CPA CMA, and she's our VP of Corporate Finance. She's based in Calgary. In Kim's previous roles, she was a financial analyst at BMO, as well as Canaccord Genuity, where she covered special situations, oil and gas, and exploration and production. So we met Kim a few years back. We were doing a roadshow with Canaccord Genuity internationally, and Kim traveled with us. We were fortunate enough that she joined us. I always refer to Kim as our Swiss Army knife. She wears so many hats in our organization. She covers financial analysis, market and peer research, corporate communications, and she's also leading our work on the Department of Energy Loan Programs Office application. If you could go to the next slide, that would be great. Thank you. All right, so first and foremost, we are a clean technology company. We're in the final engineering and fundraising stages to develop and build out a 5,600 barrel per day used motor oil recycling facility in Texas. Cost is roughly $300 million capital cost. We have already established a patent suite to back us up, as far as 32 patents issued and or pending globally. Our project payback is less than 3 years. The project has a 55% adjusted EBITDA and a 25-year unlevered IRR of 28%. Most importantly is our project is not reliant on government subsidies, unlike renewable diesels. So that's a good thing. We can stand on our own and become profitable on day one. On the environmental front, we chose to engage with a firm known as GHD Services out of Houston, roughly 10,000 employees. And we had them calculate our plant emissions as well as our greenhouse gas emissions being avoided by what we're planning on doing here. So they did 3 life cycle assessments for us, and they determined that by recycling used motor oil in Texas, we'll avoid 900,000 tons of CO2 equivalent emissions each year versus the burning or current disposal methods for used motor oil. Go to the next slide, please. So I think it's important that you actually understand what I'm talking about when I talk about used motor oils and base oils. Everybody understands that when they take in their car, the majority of you, you have a black oil sitting in there. Well, what's happening is it is not the underlying base oil that was wearing out. It's actually the additives package. And the additives package is about 15% by content. So you can understand that there is a large demand for what we're producing. Effectively, our products, our base oils, are a group 2 or a group 3. The group 3 is a synthetic base oil, and it looks like a glass of water. Where we go from there is we clean that out, and we can do this over and over and over again. And this is also important to understand that you're looking at passenger car motor oils, heavy-duty engine oils, greases, wind turbine lubricants, metalworking lubricants. So there's demand from across the spectrum that's not going away anytime soon. And the neat thing is that because we have this patented process, we can extract the group 3. Now, the group 3 is one of the fastest growing sectors of base oils and lubricants globally. And it trades at a 70% premium to group 2 base oils. And that's what gives us our advantage. We have significantly higher margins than our competitors. And we have spent a considerable sum, certainly since I've joined the company, on de-risking the project and protecting the intellectual capital. And I will get into more on the de-risking side of the project, but in the short term, I'll pass you back to Kim.
Okay, thanks, Mark. Next slide, please. Okay, so one of the key things that really sets ReGen apart is our environmental benefits of our process versus the status quo. So that begs the question, what happens to your oil after you leave the service station? So shocking 800 million gallons a year in the US, or 60% of all oil generated, is either burnt or dumped. That's more than 50,000 barrels each and every day. So why is this? It really comes down to economics. There's not a lot of value in UMO based on its current end uses. So depending on WTI prices, your service station will either have to pay to get that oil collected or will receive a small credit for it. So for economic reasons, they may opt to burn that oil on site as heating fuel or dump it to avoid the expense altogether. The second reason is that in the US, industrial burning is still considered recycling, which is not the case around the globe. So a lot of oil in the US goes into the asphalt plant market, cement plants, or is reprocessed into marine fuels. Now, this is disappointing because, as Mark mentioned, base oils don't break down. They can be re-refined over and over again. In our case, we can produce a high quality, high demand product that's short in supply. So we know our process is significantly better for the environment. We've had GHD Group conduct LCAs to quantify that for us. So just looking at a few of those numbers. So compared to dumping down the storm drain, we're 99.7% less ecotoxic. We have 82% lower CO2 emissions versus burning. And then considering production alone, you're looking at a 36% reduction in CO2 compared to standard refining. In absolute terms, our 5,600 barrel a day facility has the CO2 impact equivalent to taking roughly 200,000 cars off the road. It would also address about 10% of the UMO burnt or dumped each year in the US and would displace about 13% of imports into North America, which would have a higher carbon footprint given the long distances that they need to travel from the Middle East and Asia and the fact that they come from virgin sources. So obviously, there's fantastic environmental benefits, but the second key differentiator for ReGen is really our economics. By cost effectively producing 53% group 3 base oils, we capture the 70% price premium, or roughly $1 to $2 a gallon over group 2 that our peers make. So why is synthetic so much more valuable, or group 3? It really comes down to being synthetic. It's better for your engine. It provides better fuel economy, lower emissions, and you can go longer between oil changes. So as a result, consumers are switching and automotive manufacturers are mandating it in their new vehicles. Given the demand profile, it's actually quite shocking that only 1 in 250 gallons of used oil in the US is refined back into a group 3. This tells me there's a massive market opportunity and that our ability to produce group 3 is a key competitive advantage. It's also why we're forecasting adjusted EBITDA margins for our project of over 50% versus our re-refining peers that are going to average at about 14%, looking at consensus estimates for next year. So with that, I'll pass it back to Mark, who can just walk you through a little bit more on our process and the project. Next slide, please.
Thanks, Kim. All right, I think it's important that you understand what we've accomplished to date in order to bring you up to speed. So just before I joined the firm in late 2017, the IP was secured, the fund, the company was recapitalized. And since that time, just on Texas, not any other projects or any other investigations, we've spent over 20 million US on advancing the engineering and the patents. We currently have over 32 patents issued and pending globally, big push into the PCT and EPO market on the patenting side. We also constructed or had constructed a 5 barrel per day pilot plant. It was built and run for 6,000 hours in Texas. That's since been disassembled, but many studies that came out of that. I think we conducted at least 2 pre-feed studies on that, and we secured samples for the Group 3 at the time. Moving forwards, we've completed our work with Stantec and WSP. We've been working with Koch for the last 2.5, 3 years on the EPC contracting side. And in Q2 of 2022, we completed not only our FEL2 or our pre-feed study, but we also advanced into value engineering, where we basically looked at all of the components of the process and adjusted them in order to bring down costs and increase efficiencies. So in that highly inflationary environment, we did our costing. We know what our project costs. We're not talking to you about five-year-old issues here. We're talking to you about 1 year ago. We're already working with some of the largest firms in the world, including, as I mentioned, Koch Industries, Advario, which used to be known as Oil Tanking. They're a large private German terminaling services facility and or company, and we're working on their site in Texas City. PCL, who would be familiar to most Canadians as the largest EPC contractor in Canada, but also in the top 5 in North America. And we've also started a recent partnership or work partnership with Northern Trust, which oversees over $14 trillion of assets on the banking side. And we're working with them on greenhouse gas emissions and trading credits, quantification, things like that. So we're building our business against a backdrop of growing demand for greener lubricants, greener transitionary businesses between the old economy and the new economy of EVs. And there is a distinct drive towards the Group 3, which our competitors don't make. But as I mentioned, we're one of the only re-refiners in the world who can produce the Group 3, and our facility in Texas will be the largest in North America once it's fully commissioned. If I just quickly tackle some of the points that are key to most investors on the feedstock front, we've negotiated and or signed up to 66% of the feedstock LOIs, and we're continuing to work towards about 150% of our needs. On the offtake front, we're under NDA with several, I can't give you a number, but several super majors, and global blenders. Those would be household names to most of the people on the call. We've shipped samples of our Group 3 to them over the summer. We have received feedback on the majority of them. We're also in discussions on offtake as well as strategic investment with those parties. On the financing front, we engaged with National Bank Financial. We've been dealing with their Canadian and US offices, and they are focused on both equity as well as debt on the Texas City project, while we have also engaged with Raymond James out of the United States and their team, who has experience in base oils and re-refining. They are taking a more opportunistic approach for add-on projects that can complement Texas City and or wholesale takeouts of existing re-refineries where we can go in and retrofit them. Raymond James is also working with our team and led by Kim on this, as I mentioned earlier, for the Department of Energy's Loan Programs Office, and that's under the Inflation Reduction Act. So you've probably seen that in the news a lot. and that's primarily debt. We've also received a indicative terms proposal from Export Development Canada for US $108 million towards the project. And again, we are not reliant on government subsidies, which is a really big point for this. On the greenhouse gas credit side of things, we did engage with GHD Services. We continue to work with them. They conducted the 3 LCAs that Kim's already mentioned. And as I said earlier, we're also working with Northern Trust. We put out a press release on Monday, the 11th. You can go to that on our website at www.regenii.com or regen3.com and take a look at the details there. But working with one of the largest financial firms in the world to have a trading ecosystem for our platform, for our credits, it's a pretty nice place to be. And I'll push you back to Kim. Next slide, please.
Okay, there we go. Thanks, Mark. So just a quick overview of our cap structure. We've got about 118 million shares outstanding, 132 million fully diluted, which gives us a market cap of just over 50 million. We've got a large following in Europe and Germany, which they've been a great support to us and very much speaks to our sustainability aspects. Lastly, we've got 20% insider ownership, including very recent buying by some of our directors. So we're aligned with shareholders and committed to seeing this project through. We do believe that the stock is trading at a fraction of our project's potential EBITDA, and we see significant upside as we deliver on our growth strategy, which Mark will touch on next. Next slide, please.
Thank you, Kim. Okay, so very quickly, we have engaged with National Bank working on the Texas City Greenfield project. We have brownfield opportunities coming through the pipeline as well under Raymond James. The Department of Energy is another application that's going into the process. We also working on our own efforts with Export Development Canada. We have 32 patents pending and or awarded globally, and we see those coming online because they do take years, but we see great forward momentum on that. We're working through additional greenhouse gas credits quantification and verification in addition to the trading and forward sales and work we've done with GHD as well as Northern Trust. We are continuing to work on LOIs for our UMO feedstock, but keep in mind that we have the leverage and the margins, so that's not an issue for us. We are working towards the completion of FEL 3 or FEED, and we have been gathering different proposals to keep the engineers honest, and so that's moving forwards. Obviously, reaching the FID is important, but all of these things are coming into place to backstop that. And that at that point, we'll move into final permitting and construction. And of course, we also have national opportunities and international opportunities, and we are being approached daily because we do have a disruptive technology or a disruptive process. And last night we were on with Geneva and Singapore. A couple days ago, we were on with teams in Japan as well as South Korea. We've been approached about South America from a super major. So I think, well, I know you're actually joining us at an inflection point in our business, and we will continue to deliver on corporate milestones and shake up the re-refining industry as a whole. At this point, that ends our presentation, and I'll pass it back to you, Carolyn.
All right, thank you so much, Mark and Kim. And we're right on time, but we're going to throw you one question here. So you've talked a lot about your process, everything going on with the offtake, with the engagement with the banks and the latest news releases. Why should potential investors consider investing in ReGen 3 at this time?
Well, you can make a lot of money and you can do good things for the environment. So I don't know of many projects that, without relying on subsidies, that can come forward, can clean up an 800 million gallon per year problem in North America and make a lot of money for the business, for the shareholders, at the same time as reducing CO2 equivalent emissions, 900,000 tons per year. and truly have a circular economy where you can actually go out and take the same product, purchase it from collectors, and clean it over and over and over again until it's not necessary. And we don't see peak oil really demand for at least 20 years. Kim will correct me if I'm wrong on that, but we just see a growing demand for this. These base oils are going to be used in EVs for shock absorbers. They're going to be used in wind turbines, as I mentioned. There is a paradigm shift coming, but it's going to take a long time. And in the meantime, we need to help keep stuff out of the ditch. We need to be able to make a really industry-changing EBITDA margins. And we're working with some of the largest companies in the world. So I think any one of our milestones that comes on in the next quarter or two, you will see a dramatic shift in the price.
Thank you so much, Mark. And again, thank you for having have both of you here today. If anyone would like to connect with ReGen 3, please reach out to one of us here or go onto their website and reach out to the investor relations team there. Be sure to add the ticker GIII on the TSX Venture. Thank you, everyone.
Thanks very much, everybody.
Thank you so much.
Appreciate it.